I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today we're discussing rental property loans.
I don't think there's anything actually more exciting, this is real, than talking about rental properties.
In many ways, it seems so simple, but yet a lot of people need to know, how do they get one? And are they eligible to get one?
Yeah.
So what do you need to get a rental property loan? And so this is what we did. We took a whole list, 7 points, and we're going to go over this. If you check yes to the following questions, you could be eligible.
And you need to check yes on all of them.
Okay.
There may be a slight exception, but the easiest thing is you have to check yes on all of them.
So here we go. Is the property residential 1 to 4 units?
Yeah, so basically, is the property a single-family home, or is it a 4-unit complex like a triplex, duplex, or fourplex? This isn't a single-family home with 3 guest homes on it. That can get very confusing. But as long as it's a single-family home or it is a 1 to 4 unit plex, you're good.
All right. Do you own or have you owned a primary residence before?
Took us, months to kind of figure out how to educate borrowers, but it's very, very simple. This is because the lender wants to make sure that there's no chance you're going to move into it as your primary home. This is an investment loan for a little more savvy person and a little more responsibility. It's the lender's going one extra step to make sure that you do have a primary home or that you've owned one in the past so that you don't use this investment loan for your primary loan.
Do you have 20 to 25% down payment?
And this is a classic question. Well, I thought that there's less than, 20 to 25% down payment. Yes, that is true, but based upon market conditions today, the interest rates really stink. And also that the rental comp analysis that's going to be done on the property is not going to be what it needs to be in order for the loan to work. So we are simply cutting right to the end and saying you need between 20 to 25%.
As a minimum.
As a minimum, yes. Well, yeah.
And of course, if you have more, great, but if a minimum 20 to 25%.
Correct.
Is at least half that down payment your own funds?
So we get a lot of calls from people that are, this is my, their first time getting in a rental property. Again, that's why I said at the beginning, it's exciting, the cash flow, the dreaming in the future. And so sometimes they don't always have all the down payment. Their short answer is if you can have at least half of it as your own money and the other half coming as a gift from a relative, that can be acceptable.
All right. Have the funds been in your bank for at least 3 months? What does that mean?
So this is classic. We just need to source and season the assets, meaning the money. Cash is king unless you're buying a home. Money under your pillow, lenders don't like that. Underwriters don't like that because they don't know where it's come from. So the easiest thing to say is, can I produce bank statements for at least 3 months that show that money there?
Yeah, and basically it's similar to the question number 4. I mean, it's your own funds showing 3 months.
Now,
it's your own funds.
Yeah, and some people get creative and like, well, what happens if I got that money from my grandfather? And I said, you know what? After 3 months, that's all we ask.
Yeah.
And that's all the underwriters ask. So we don't need to get into the whole, backdrop as to how you earned it, how many magazines you sold or whatever it is. The fact that it's there, it's there.
All right. Do you have reserves? What does that mean?
So this kind of ties back into the second point, which is they just want to make sure if they give you this loan that you're not on your last nickel. So this is a good one. So you need to be able to afford your mortgage payment for the rental property and your rent where your primary home is, or your mortgage where your primary home is, and also a couple extra bucks just to kind of help you in case it takes a little while for the tenant to move in, or in case, Murphy moves into one of the bedrooms, as they say, and you need an air conditioning unit because it breaks.
Yeah, and each case is very different, right? Because sometimes some may need more reserves, some may need less.
Right.
It's just case by case.
Yeah, I would say anywhere from, call it 6 to 12 months of the mortgage payment for reserves.
And do you have a credit score of 680 or greater?
Yeah, and credit is even more important with these investment loans because they're going a lot based off of your credit versus the income. If you've noticed, we haven't talked about income yet. This is all based upon your credit profile and the actual property itself. So 680 or greater gives you a much better chance of being successful on one of these loans. All
right, so if you've checked yes to all those questions, those 7, then you meet the eligibility requirements. It's not a guarantee you're going to get the loan, but contact us, the Mortgage Brothers, and we'll be sure to go through what your options look like.
Yep.
And be sure to subscribe, comment, and like if you like what we're doing here. Take care, everybody.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.